In this video, we'll explore a powerful financial tool called a Home Equity Line of Credit, or HELOC, and how you can obtain one on an investment property here in the UK. HELOC stands for Home Equity Line of Credit. It's a type of revolving credit that allows property owners to borrow against the equity they've built up in their property. Essentially, a HELOC allows you to tap into the value of your property without selling it. If you've built up equity in your investment property, it may qualify you for a HELOC. However, keep in mind that the availability of a HELOC and the amount you can borrow will depend on factors like your credit score, income, and the equity in your property. It's important to note that not all lenders offer HELOC-style products, so you may need to dedicate some time to find the right one for you. If you're determined to find the best HELOC on your investment property, here are a few steps you need to follow. Number 1, check and improve your credit score. A good credit score increases your chances of loan approval and may secure a lower interest rate. So take the time to assess your credit score and consider improving it if necessary. Step 2, identify lenders and compare terms. Look for lenders who offer HELOCs specifically for investment properties. Compare their terms, conditions, interest rates, and fees. Consulting a financial advisor or mortgage broker, reading online reviews, and seeking recommendations can help you make an informed decision. Step 3, determine your property's equity. Evaluate the amount of equity you have in your primary residence and any other investment properties that you own. This assessment will help you determine the potential borrowing amount and the interest rate you might be offered. Utilize a HELOC calculator to simplify this process. Number 4, compare interest rates. To secure the best deal, compare interest rates from multiple lenders. Remember, your credit score, income, and other factors can influence the interest rates that you're offered. Number 5, consider additional fees. Keep in mind that HELOCs may have application fees, appraisal fees, and annual fees. Read the fine print carefully and understand all of the associated costs before signing any agreement. Number 6, assess repayment terms. Evaluate the repayment terms of the HELOC and ensure that you'll be able to comfortably afford the monthly payments. Remember, a HELOC is a revolving line of credit, so you'll only be charged interest on the amount you actually borrow. Now that you've done your research and found the best HELOC for your investment property, it's time to apply. Here's what you need to do. Number 1, find a lender. Look for a lender or financial institution that offers HELOCs on investment properties. They will assess your financial situation and determine the amount that you can borrow and the interest rate you'll pay. Number 2, careful consideration. Keep in mind that taking out a HELOC is a significant financial decision. Before making an application, carefully consider your ability to repay it and understand the risks that are involved. If needed, consult a mortgage broker who can guide you through the process and help you to negotiate the best terms. While a HELOC can be a fantastic tool, there are alternatives worth exploring. Here are a few options to consider if you're looking to borrow against your investment property. Number 1, home equity loans. Similar to a HELOC, these loans allow you to borrow against the equity in your property. However, instead of revolving lines of credit, you'll receive a lump sum upfront and make fixed monthly payments. Number 2, personal loans. Unsecured loans that can be used for any purpose. Personal loans have fixed interest rates and set repayment terms, providing stability and predictability. Number 3, remortgage loan. You can use your investment property as collateral for a remortgage loan. Unlike a HELOC, remortgage involves lump sum payments, repaid with interest over a set period. Number 4, peer-to-peer lending. Platforms that connect borrowers with investors willing to lend money at fixed interest rates. If you don't qualify for a traditional loan or prefer to bypass the banks, this may be a viable option. Number 5, cash-out refinance. With cash-out refinance, you can take out a larger mortgage on your investment property and use the extra funds to invest in new properties. Remember, each option has its pros and its cons. Your choice will depend on factors such as your financial situation, credit score, and long-term goals. It's always wise to consult a financial advisor or mortgage broker before making any borrowing decisions. If you're interested in finding a loan for your circumstances, simply click the link in the description below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it'll give you access to quotes from around the UK tailored to your circumstances. It's totally free to do, and of course it won't affect your credit score. So click the link in the description below and fill out the short form to try it out.